rally in the U.S. dollar wreaking havoc on gold, which did fall 2% today. Our next guest says the sell-off isn't over. Let's go off the charts, I should say, with Rich Ross of Evercore ISI. Rich, what are you looking at?
Yeah, look, Melissa, the stronger dollar, higher rates, and the ongoing collapse in commodities, crude, credit, and the curve is pretty much a perfect storm for gold. And as you can see from the chart, this is a chart that doesn't need a perfect storm. You know, we spent a lot of time looking for a bottom, but when you see a downtrend like this, I'm not sure why. There's a lot of lines on this chart, but clearly the path of least resistance remains lower. See this well-defined trend channel here. Interestingly, you're down 11% year to date. Keep in mind, the euro also down 11% year to date, and the dollar up just about 11% year to date. So it's all about the Benjamins on this chart. Above this blue line here, the 1100 level, I might cover some shorts because you get a little reflex here to the upper end of this trend channel. But here's the chart I really like on gold. This is your longer term weekly. You can see that big run up, head and shoulders continuation pattern there, and we've been in a downtrend ever since the 2011 top there up around 1900, 2000. The trend remains down. This purple line is the key to the whole trade here. I simply will not buy gold until we get a break above it. That's the 100-week moving average. It comes in around 12.15. Now, I know you're saying, well, I have to wait for another $200 before I get it. Yeah, you do, because the downside here, the trend is down. Momentum's going to take us to $1,000 here. Ultimately, I think we hit those shoulders. That comes in around 860, 865. Don't look for a bottom in a chart that looks like this. Wait for the break. Wait for signs of exhaustion. Rather buy it higher on the way back up than on the way back down.
All right, Rich, thank you. Rich Ross, Evercore ISI. Do his charts scare you out of waiting a couple of days?
No, it doesn't scare me out of waiting a couple days, but there is something to be said. If we break that lower trend channel line that Rich showed there, then I think you are going to have some real damage in there. And I thought gold would decouple from the dollar. It's not happening. If you expand Rich's chart out and you go back to the 1976 to 2000 bull market, about $800, what Rich is talking about, that is a 61.8% retracement of that entire move. It's also a breakout point. So if we break that lower channel, I would put my target in gold at $800.